It was going to be interesting to see what happened with the gold deliveries in August. And as you can see here, last night was first notice day and 32,732. So quite a significant chunk. Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And what another exciting week in the gold and silver markets. Saw another rally this week, even if much of it happened in the beginning of the week. And then there was a little spoofage going on. Although, fortunately, as you will see shortly, the prices ended around the high marks of the week. Gold around $1,975, which we will dig into today, as well as some interesting developments I think you will be finding fascinating. Quick note, today's video is sponsored by K2 Gold. You may have seen Stephen Swat was on the show a couple of weeks ago. They just got a permit to drill in their Mojave project. And there will be a little more information coming at the end of this video, a link to that interview if you'd like to find out more. And especially with the rising gold price, certainly a time worth doing so. And with that said, let us dig in here because as you've heard me talking about quite a bit over the last couple of weeks, it was going to be interesting to see what happened with the gold deliveries in August. Again, let's take a look here. You saw April was that big number, and then May was even bigger. And as you can see here, last night was first notice day and 32,732. So quite a significant chunk. And let us take a look at the delivery notices, which are interesting in their own right. And you'll find out a little bit more about this on Sunday's show with Denver Dave Kranzler's Silver and Gold Market Update. And if you have not already hit the subscribe button and the notification bell, which is right down there, you're going to want to do that now and hear what he said, because as I was talking with him, it really struck me where, again, earlier this week we had, when will gold's rally run out of steam? This report from JP Morgan. Ferocious rally will likely run out of steam near $2,000. They just don't see any fundamentals to support the move. Then I believe it was yesterday, Goldman says gold has no role in the portfolio of wealthy clients, which makes it interesting then that when you look on the delivery report, so for the Goldman House account, they're showing up stopping or receiving 6,220 contracts. And of course, our friends at JP Morgan. Interesting, I had to cough after saying friends at JP Morgan, taking delivery of 4,000, almost 4,100 contracts. So what up with that? I mean, here it is. They're saying, I don't know. I don't want to be the conspiracy theorist, but I don't think it's an accident when it's not like I think some guy right out of undergrad popped this report out onto Fox Business. I mean, they know these things. I mean, the whole point is to get attention on them. Here are the two banks saying that, get rid of your gold. And what are they doing at the same time? They are buying them. So again, that's why anything out of the mainstream banks, again, I'm not trying to be critical. I mean, I guess sometimes I am, although this was why I left Wall Street. I saw stuff like this all the time. And anyway, just try and pass that along. So hopefully that will be helpful in your quest. Quick look at the gold price. You see another volatile day, up $17 on the day in total. It looks like over 1980 on the Kitco, then clobbered down to 1960, back up, finishing around 1975. And with the way these markets trade and are set up now, let's just call this a guess. But I wonder what if we won't see a big move once this thing finally crosses through 2000. Looks like 1980 is what the technical analysts would refer to as a resistance level. We've seen it. And there's the blue lines a couple days ago touching up against that. So who knows? Will we see that next week? I don't know if it'll be next week, the week after, or sometime soon, but um, despite Goldman Sachs and JP Morgan not seeing any fundamentals for the gold move, anyone else who's listening to the Fed in the last couple months, let alone couple of years, I think is seeing that. Quick look over at silver. Wow, I guess it a little rally towards the end of the day. I haven't seen it got up to 89 cents on the day. Love that little spoof there in the blue line during the Fed meeting. But after a couple of tougher days in the silver market, you saw that was almost looks like over $1. Got a nice rally today, and then you have quite a bit of volatility. Now, keep in mind, because the price is moving more, these charts are spread out, but all right, I think there's probably, if I got to look at the trading records, might find something that is not natural about that. Yet still just here 24 to 24.35-ish, then down, let's see, that would be, I don't know, maybe a 50-cent move down, then rallies back up. I mean, there are years where we didn't see volatility, like moves like this in the silver market. Now it's happening almost every day. I would say, why is that happening? And certainly the things that we've been talking about on the show here, the leverage, banks moving away from their short position, EFP markets breaking, I think it's all adding up, and you're seeing the effects of that in the price. But I would maintain there's a lot going on beneath the surface, which we will continue to track here on a nightly basis for you at Arcadia Economics. Quick look at the silver stocks. Much better day than some of the previous ones, where you see all of them up about 2-3%. Pan American Silver up 541, although I think of Pan American more as a gold stock. I believe it's 25% of revenue comes from silver. So yes, there is some silver exposure, but if you're looking for pure silver stocks, they're ones that are going to have a higher leverage to the silver price. Not that that means Pan American is bad, but just if you are looking for silver exposure, there's a difference between Pan American and First Majestic. And especially with so much silver being demanded into these ETFs, again, you see 20 million ounces this week. The week started off a little slow, as you can see here. Actually 3 of the days not too much, but then you have these two chunks in there. And I know it's easy to lose perspective of these numbers, but think about it like this. Last year, in a regular year, there was about 900 million ounces mined. This year it's going to be substantially lower. One of the topics that we will be discussing at Silverfest on September 12th to 13th, and good news, I actually just about done mapping out the schedule, the topics. We have quite a guest list. Again, I feel so darn blessed that I've gotten to meet so many of these people that I've studied for years. The majority of them who appeared in the Big Silver Short book, and now really just getting, the speakers of the silver world, the investors, the viewers like you at home that make this all possible, the companies together, and really celebrate. I mean, gee, we've had so many years of whining about the price, and I'm certainly guilty on that. But especially it's nice now seeing the price up, but also getting to meet so many people. And, I'm guessing if you're watching this, it's not, I don't know, maybe some people silver, they just look at silver and see a trade they want to put on, and that's fine. But I think a lot of the people that have stuck with this really believe in the idea of sound money, whether that's silver or gold, but just free markets, Austrian economics, and treating each other well rather than so much of what we see in government. So I think it stands for a bit more than just an asset, and I'm excited to celebrate with all of you. It's going to be quite a time, and hopefully next week I'll have more information up on the website. But anyway, tangent aside, one of the panels I have is, putting these into perspective and how much metal was lost during COVID, because I said 900 million ounces mined in a regular year. It's going to be somewhat lower than that. But let's just use 900 for a second. So here, if this week was 20 million ounces, then at that pace, 5 weeks would be 100 million ounces. So times 9, 100 times 9 would give you the 900 million. So 9 times 5 weeks would be, at this pace, in 45 weeks, so slightly less than a year, the entire, even if the mines hadn't been shut down, the entire silver production would be going into the ETFs, leaving none for industry, none for any other purposes. And that's why I continue to run into a growing group of well-qualified people in the silver industry who think it's simply impossible that they are putting this much metal in there. You heard Andrew McGuire talk about it, and fortunately next Tuesday, first Tuesday of the month. So we'll have Andrew back on the show, and we'll dig into that a bit more. And we'll see how it goes. I think it's really an exciting time. It's already been an exciting time, and hopefully folks have been doing well. I mean, a lot of the mining companies I talk with mention how even going from $17 to $18 made a big impact on their bottom line. So let alone if prices go higher, which I do think they will, but even at these levels, you know, it's going to be similar to gold at 1900. I mean, these companies are going to be doing really well. And even if silver stayed at 24 or 25 bucks for the next couple of years, that's going to be really good for the mining companies, let alone if it goes higher. So, and there it's ticking up a few cents. And kind of excited for the open on Sunday night. Was quite an experience last week. Who knows? Maybe we will see another spike. Maybe we'll see $2,000 gold next week. I think it's coming sooner than later, and will be fun to watch. Lastly, before we wrap up, I want to thank you all for being here tonight, and hope you found this helpful. And like I mentioned, the video is sponsored by K2 Gold. Stephen Swatton was on the show a couple of weeks ago, talked about an interesting project he picked up from Great Bear's Chris Taylor. And to find out more about that, you don't have to do anything because that video is coming your way now.